Welcome to our daily crypto news. Here's what's happening. Valkyrie files for Ether Futures ETF with the SEC. Asset management firm Valkyrie filed for an Ether Futures exchange-traded fund with the U.S. Securities and Exchange Commission on August 16. Asset management firm Valkyrie has filed for an Ether ETH Futures exchange-traded fund (ETF) with the United States Securities and Exchange Commission. According to August 16 documents, the application is an addition to the company's previous move to change its investment strategy for a Bitcoin (BTC) futures ETF in line with the regulator. As per the application, the fund will not directly invest in Ether but will seek to purchase a number of ETH futures contracts. Ether is the native coin of the Ethereum blockchain, used for peer-to-peer transactions within the decentralized network. Ether may be regarded as a currency or digital commodity depending on its specific use in particular transactions. Ether may be used as a medium of exchange or unit of account, reads the document, which adds that, although a number of large and small retailers accept Ether as a form of payment in the United States and foreign markets, there is relatively limited use of Ether for commercial and retail payments. Similarly, Ether may be used as a store of value, although it has experienced significant periods of price volatility. Valkyrie just filed for an Ether Futures ETF, which is in addition to their 497 filing to do name strategy of $BTF to Bitcoin plus Ether Futures to get out early. In addition to the investments in Ether Futures, the ETF will invest its remaining assets directly in cash-like instruments or high-quality securities, which include bills, notes and bonds issued by the U.S. government, along with money market funds and corporate debt securities. According to Valkyrie's application, the ETF investment in Ether Futures contracts will be limited to 8,000 contracts per month, in compliance with position limits established by the Chicago Mercantile Exchange. Futures contracts are standardized agreements to buy or sell an asset at a future point at a specific price. If approved, investors will be able to wager on future prices of Ether through the ETF. Cointelegraph previously reported that at least 6 other major asset managers have similarly filed to offer an Ether Futures ETF to US-based customers, including Grayscale, Van Eck, Bitwise, Volatility Shares, ProShares and Roundhill Capital. The wave of applications follows high expectations that US authorities will soon approve a spot Bitcoin ETF in the country, with multiple investment firms seeking a regulatory green light, including Wall Street giants BlackRock and Fidelity. Bitcoin Depot Q2 revenue jumps 18% YoY, eyes growth after Nasdaq listing. Bitcoin Depot Q2 revenue jumps 18% YoY, eyes growth after Nasdaq listing. Bitcoin Depot records $197.5 million in revenue in the second quarter of 2023, spurred on by partnerships with various U.S. retail stores. United States-based Bitcoin ATM operator Bitcoin Depot said it posted its best-ever revenue numbers in the second quarter of 2023 as the company looks to expand its footprint after its recent listing on the Nasdaq. Bitcoin Depot released its Q2 results along with several cryptocurrency ecosystem firms, recording $197.5 million in quarterly revenue. The company noted that this is a record figure and an 18% increase from its revenue for the same period in 2022. The company also reported that its net loss of $6.1 million was down by 249% year-over-year. Its Q2 profit stood at $25.9 million, while its gross profit margin was 13%, up from 8% during the same period in 2022. Bitcoin Depot founder and CEO Brandon Mintz said the company would be looking to continue growing through 2023 following its public listing on the Nasdaq. The listing occurred on July 3 following the closing of a business merger with GSR2 Meteora Acquisition Corp. Bitcoin Depot has also announced a number of partnerships with convenience stores across the U.S. as it aims to increase the number of Bitcoin access points across the country. The company also carried out a software conversion of its ATMs in February 2023 to BitAccess. The conversion reportedly cut out previous annual licensing fees, which were incurring extra costs. Bitcoin Depot is also building out its BD checkout service, as well as other software and operational services, which has allowed the company to tap into revenue streams from kiosk management software. As Cointelegraph previously reported, the Bitcoin ATM market experienced a downturn regarding the number of operational machines across the US in the first half of 2023. This trend took a positive turn in May 2023, with over 1,000 BTC ATM installations reportedly taking place, according to data from Coin ATM Radar. Bitcoin ATM growth began a downward turn in late 2022, with the BTC ATM ecosystem recording negative growth in global net installations for the first time ever. Singapore Central Bank releases regulatory framework for stable coins. Singapore Central Bank releases regulatory framework for stable coins. The framework outlines requirements for stable coin issuers to meet to be deemed as regulated by the Monetary Authority of Singapore. Singapore's central bank has released a revised regulatory framework aimed at ensuring stability for single currency stable coins, SCS, regulated in the city-state. The Monetary Authority of Singapore announced the framework on August 15, which is aimed at non-bank issued stable coins pegged to the value of the Singapore dollar or G10 currencies such as the euro, British pound and United States dollar, and whose circulation exceeds 5 million Singapore dollars, $3.7 million. The bank's Financial Supervision Deputy Managing Director, Ho Hearn Shin, said the framework aims to facilitate stable coin use as a credible digital medium of exchange and as a bridge between the fiat and digital asset ecosystems. Shin encouraged stable coin issuers to prepare for compliance if they wanted their stable coin to be labeled as mass regulated. The framework outlines several requirements for stable coin issuers, including redemption timelines, disclosures, reserve management, and capital requirements. Per mass value stability. Reserve assets will be subject to requirements relating to their composition, valuation, custody, and audit, to give a high degree of assurance of value stability. Capital. Stablecoin issuers must maintain minimum base capital and liquid assets to reduce the risk of insolvency and enable an orderly wind down of business if necessary. Redemption at par. Issuers must return the par value of the stable coins to holders within 5 business days from a redemption request. Mars noted only stable coin issuers that fulfill the new framework's requirements can apply to become mass regulated. A label the central bank says ensures they can be distinguished from non-regulated stablecoins by users. It warned those who represent a token as being mass certified would be subject to penalties set out in the new framework, which include fines and imprisonment along with being added to an alert list. The revised regulatory framework accounts for feedback from an October 2022 public consultation. Mars will need to hold consultations and Parliament must pass amendments that would enforce the framework.